family. Hey, what's going on? Welcome to another edition of Melanie Economic News. As I'm recording this video for you, the time is 3:55 a.m. It is July 22nd, 2020. All right, family. So let's go ahead and get it started. This coming to the market news coming from CNNBusiness.com. We're looking at stock futures as they open up, as futures are trading now, because remember the overseas markets are going on. The Dow is up at about 159.53 points. The Nasdaq is down 86.728 points, and the S&P 500 is up about plus 5.46. All right, family. So now that was as of closing, when it closed on Tuesday's closing. All right. The futures open up in the morning. They're looking at right now. The S&P is up about a full point. The Nasdaq is up about 10 points, and the Dow is up about 26 points. So it looks like as of now, at the time, as the broadcast I said at 3:55 a.m., the stock futures are scheduled to open up on the green. All right, let's look at some of the world markets. The Nikkei 225 Japan is down about just above 0.5%. The Hang Seng Hong Kong is down just about 1.32%. The FTSE 100 in England is down about 0.5%, and the DAX German is down about just over 0.5%. All right, family. So we'll go ahead and get into some commodities here. Get into a little bit of the commodities. Let's go with metal. Let's go with a little bit of the energies. Light crude oil is about $41.85 a barrel. Then we go to Brent crude oil. It's up down just up under 3 cents to about $44.29 a barrel. All right, family. Let's get into some gold. Precious metals. Gold is up at about $1,860.20. Silver is up at about $22.66. Palladium, $930 $930 even, and copper is $2.97. All right, family, and some of the consumer goods. Coffee, that's a big one, family. Coffee is at about $106.60 a bushel. All right, per pound. All right, family, let's get into the actual news, family. This news story comes from ZeroHedge.com. Gold joins silver in surge as Asian markets open. All right, Japan's open appeared to trigger silver surge tonight, and China's open sent gold futures launching higher. All right, this was as of 9 o'clock Eastern Standard Time last night, family. All right. What is the message about the U.S. dollar from the precious metals market relative to worth versus fiat? All right. Safe haven demand is driving silver prices higher, along with supply concerns. There are also expectations of increasing industrial demand, particularly in the solar energy sector. Even if the global economy is slow to recover, silver may get a boost from government stimulus as various programs funnel money into green energy projects. All right. While silver is much more sensitive to industrial demand than gold as its core, silver is a monetary metal, and it tends to track with gold over time. The white metal should continue to benefit from the inflationary pressures of government money printing and stimulus programs. A Morgan Stanley note quoted by Bloomberg says silver will continue to be pulled higher by the strong gold price and supportive financial conditions. Additionally, global central banks printing money is starting to drive more investors to question their forever in faith in fiat, as Deutsche's Jim Reed notes. The Feds for one, has a lot more room to run. All right. Meanwhile, silver mine output was already trending downward, and it has been further squeezed by mine shutdowns due to COVID-19. Analysts at the Silver Institute say that they expect mine supply to continue its 4-year slide this year. Even with most mines back online, this institute projects 7% decline in mine output in 2020. Global mine production fell by 1.3% in 2019. Gold to silver plunge to fix 81 times tonight, breaking the recent multi-year uptrend. Alright, family. So we're looking at gold and silver going up, and especially silver prices going to go up, family. Alright. Alright, this next story also comes from zerohedge.com. Alright, Royal banks and BMO set aside provisions for sour loans. Alright, this is coming from Bloomberg. Alright, this is a story that we've been tracking, that the banks are setting aside loan loss prevention, loan loss preventions, provisions. Alright, they're setting aside, so basically loans are not being repaid. A lot of people are unemployed. Some of these businesses are not paying their rents for their landlords, so their loans are going bad. So everything is going downhill, and the banks now are setting aside loan loss provisions so they can go ahead and just cancel these loans out, family. Alright, this story comes back all the way from May 27th, family, but we've been following it up, and we'll get more updates on this one, family, because more banks have done this. Alright, Royal Bank of Canada and Bank of Montreal joined their Canadian peers in setting aside record preventions for loan losses as they brace for economic fallout from the coronavirus pandemic. The Royal Bank, Canadian's largest lender of assets, earmarked 2.3 billion Canadian dollars, or 2.06 billion US dollars in fiscal second quarter for its sovereign debt, the highest among the Canadian banks have been reported as so far, while Bank of Montreal put aside 1.12 billion Canadian dollars. Both Toronto-based firms reported early Wednesday that missed analyst estimates. Alright, two of the following lenders, Bank of Nova Scotia, National Bank of Canada, in posting higher provisions for credit loss to brace for the aftershocks from plunging oil prices and a pandemic that has caused an economic standstill, with the set-asides cutting into earnings across the bank in the 3 months through April 30th. Alright, family. So this is just Canada, but here in the United States, J.P. Morgan, Bank of America, almost a lot of the banks have set aside provisions for loan loss, for loan losses or sour debts. Alright, if you hear that means sour debts, that means loan losses. That means they're expecting not to be paid back. They give out these loans and they're not expecting to be paid back for these loans, family. Alright. And then we come to our final story. Alright. And this is emblematic of what's really going on out here, family, that the media won't report to you, family. They're too busy reporting about COVID, this coronavirus, or COVID-19, depending on whatever they want to call the cold. Alright. Or virus. I call it a cold. Alright. United, this is also from Zero Hedge, family. United posts record 2.6 billion losses. Revenue plunges 87%. 6,000 employees agree to quit. Alright. Alright, we're going to get it started. Okay, family. Alright. Wall Street was eagerly looking forward to today's results from commercial airline giant United Airlines to get a real-time sense of whether the COVID pandemic is starting to thaw when it comes to one of the worst hit sectors in the economic shutdowns. The answer appears to be no, because momentum ago, United Airlines reported they're using AUL for United Airlines, reported a worse than expected second quarter loss share of $9.31, more than the $9.18 losses expected, and down from a profit of $4.21 a year ago. This translated to a record quarterly loss of $2.6 billion as the collapse of passenger demand in the COVID quarter played out for a full 3 months. Alright. Revenue was even uglier, plunging by a record 87% to just a $1.4 billion from $11.4 billion a year ago. That's a big jump. That's a loss, family. God, man, that's a big loss. Alright, fractionally better than the $1.27 billion expected. Sure. Alright, some of the details from the report, courtesy of Bloomberg. Available seat miles, 8.96 billion, estimated 9.14 billion. Alright. They got some significant losses. All right, passenger revenues, 681 million estimated at they estimated they would get 530.1 million. All right, family, that's some of it. All right. All right, reflecting on the dismal conditions, the company said more than 6,000 employees have agreed to leave voluntarily, and many of them will more likely leave involuntarily, as with mass layoffs or a rising risk for federal roll after federal roll aid expires at the end of September. Man, so I'm gonna read that again, family, so you can hear that correctly, family. Reflecting the dismal conditions, the company said that more than 6,000 employees agreed to leave voluntarily, and many more will likely leave involuntarily as mass layoffs or a rising risk after federal payroll aid expires at the end of September. With cost still far above revenue, United second quarter cash burn averaged a whopping $40 million a day. Wish I had $40 million a day. Although it said that it expects to have a fall, expects that to fall to $25 million a day in the third quarter. The good news is that total liquidity was $15.2 billion at the end of the second quarter and is expected to increase more than $18 billion by the end of the third quarter. A deficit, so a default is not so immediate in the cards. All right. Also, as Bloomberg notes, United stood out in March and April for its desire to outlook on the coronavirus crisis. CEO Scott Kirby said that served the company well by enabling it to speed actions such as cutting costs and rising capital. And he says in the release. All right, family. So we got gold and silver going up. All right, we got the banks setting aside loan loss provisions because as tenants don't pay debt, the economies are shutting down. So some not open fast enough. People are not working. Tenants who have businesses are not paying their landlords. People are not paying the rent to the landlords, and the landlords are losing money left and right, and not being able to pay the banks the loans that they took out to get that land and put so they can have tenants who have businesses or apartments or lots, etc., so they can pay their loan back. So banks are not expecting to get their money back, so they're now setting aside billions to go ahead and just cancel those loans out. All right, and we have United go ahead and laying off some people. They're asking people to leave. Some people voluntarily left, and some people are still going to be staying there until the very end, family. All right. So once again, family, I want you to thank you for joining me for another edition of Melanie Economic News. All right, family, stay safe, be easy, take it easy, family. All right, and please take care of each other. All right, thanks again. All right, if you can see what you like, go ahead and like, subscribe, comment. Please, we always keep it constructive. I love constructive criticism. All right, family. All right, time for me to head out to work. All right, see you again for another edition of Melanie Economic News. All right, let's get it started.